Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, situation on the euro currency currently, I think not very sophisticated, at least compared to previous moments that we have discussed here. So you can see that market stands now with the recovery from the significant area of support. That is the natural support of the previous consolidation, monthly pivot point, the low of this harmonic swing at the same distance and slope as this one, daily oversold and daily confidence support. So that is a really tremendous support area. So you can see, as we have said, it's not time to sell if you are bearish, since market could show some recovery from that level. If you are bullish, this is excellent opportunity to try to enter on the long side of the market. And take a look, that market has tested the monthly pivot point. So this work has been done by the market. So the pivot has been tested, and in fact, there's very simple conclusion could be done. So this will lead either to the further acceleration, or market will fail somewhere in this area and continue move to the downside. Because currently it will depend how market will behave right now. Will it be just the respect of this support, the bounce from the first test of it, or this is really the support for further upward continuation? I hope that this will be the latter. Well, still, if market will fail, how far it could bounce from this level? So, since this is also the Jordan stretch pattern, that's the combination of oversold, that is oscillator predictor indicator, combination of the oversold and strong confidence support, usually it leads to the equilibrium, so to the area between the bands of the overbought and oversold. That area stands approximately around 135.30, 135.50 area for today's trading session. But you can see the overbought and oversold is the dynamic parameter, and it will change day by day. So today it could be the 135.30, tomorrow it could be 135 even, or some other level. So another potential target of this stretch pattern is some sort of the intraday ABCD pattern to the upside, when the trader could take the profit from this price action. Well, so we will see. Will market fail around this area, or it will continue move to the upside? But current price action suggests that the upward move is still possible. The market really could continue move to the upside. And here's why. Let's take a look at the 4-hour time frame. On the 4-hour time frame, we see that trend has turned to the bullish side, and market is showing now the signs of thrust. That is nice candles to the upside. We said that action was not the thrust when we have discussed. I said that probably market could show even the new low, 133.35, 133.40 area. This hasn't happened, but that still was not the thrust, and after that they follow some sort of the pullback to the downside. But now it's quite another tune. So you can see thrusting candles to the upside, at least some sort of the acceleration, some sort of the faster move to the upside. That is also could be treated as some sort of the reverse 127 head and shoulders pattern, but it looks a bit ugly. Anyway, now market stands now at the resistance on the 4-hour time frame. That is 4-hour confidence resistance, 134.90 area. And take a look, market has tested the weekly pivot point. Also, that is the natural swing low, the resistance as well. So market has tested it, bounce, break into the downside, now retest from the other side. That is also the resistance. So depending on how market will behave right here, will tell us, will it be just the pullback to the upside, or that will be the starting point of the continuation to the upside. So if market will pass above the weekly pivot point, will move above the weekly pivot point. This will mean that sentiment is changing to the bullish side. In this case, probably we could be ready for upward move, upward continuation. But if market will fail somewhere in this area and returns right back, this probably will tell us that that was just a bounce in respect of this ABCD target, respect of the significant support area, and attempt to adjust the oversold condition that is not very comfortable for market. So that's why this bounce has appeared. Because from the market mechanics point of view, market has no reasons to continue move to the downside except trend shifting. Because what we see on the market, we see hitting of the overbought on the daily time frame. So we hit it. ABCD retracement to the downside. Retracement that market has completed around strong area of support. Tested the monthly pivot point and return right back. So that is absolutely normal action with the retracement, with the when the market stands at overbought, some deeper retracement, market has accomplished harmonic swing. But if market will return right back, it will simultaneously break the harmony of the retracement here. It will move below the monthly pivot point. That will change the sentiment on the longer term perspective, and that will be not natural for normal bullish development of the bull trend. That's why this area where market stands now is very significant. So keep an eye on this level. It's very important for further perspective on the euro currency. If still we suggest that this is really upward development, what levels we could watch for? So if you have skipped this entry point in this area, as we have suggested and have recommended to enter long in this area, what you could do now if you're bullish? If you're bullish, you could take a look at this recent swing. Because as I said, if market will fail and returns right back inside of this body of this previous consolidation, that will be the very worrying sign for bulls. That's why if you're bullish, you should not wait to deep retracement and try to stick with the current swing up, because you can see this really nice bars to the upside. Particularly speaking, the nice area to watch for is this so-called the neckline of this so-called as well head and shoulders pattern, but as I said, I do not very like the shape of it. Still, if you measure the extensions of the shoulders, it will give you approximately 127 point for the head. That is in fact acceptable, but it's a bit too choppy price action with this. Anyway, that is the previous resistance that market has broken already. Retested it, continue move to the upside. Now we stand at the conference resistance and weekly testing the weekly pivot point on the 4-hour time frame, and market could show some bounce down. So that could be in the sort of this ABCD pattern. That creates an agreement with the significant support area is around 134.30 area. That is confluence support. You could take this one confluence support or that one. Anyway, this is the support cluster that gives an agreement in the confluence support. And take a look. That is stands very close to the neckline that market already has tested. So if market will break it to the downside, that will be the warning sign. So you could place the stop, for instance, below this swing low, or below this 618 support area. That will be, I suppose, sufficient, because following the natural development of the bullish movement of the market should not taken out of this recent swing low, and furthermore taken out this 618 support if market is really bullish. Because market not at overbought, there are no significant resistances right above it. I mean on the daily time frame. Market now the testing point, pivot point. If it will fail at the weekly pivot point, this will tell us something. That something is not as bullish as it's suggested by this starting move to the upside. So keep an eye on the 134.30 area as the potential entry point. Well, and do not place too far stop. If you will place stop somewhere below this low, it will be probably too significant stop loss. If you will apply some different way to enter, so place the stop accordingly. So that is on your opinion how you usually works with this entry technique, how you possess yourself when you would like to join with some upward action. But I suppose that 134.30 area is pretty nice to watching for buy signals completing of this ABCD pattern, trying to enter on the long side of the market.